Hello. Okay, welcome everybody. Yes, today we are trying something completely different. We're going to be attempting to do things on my Twitter. I want to see what this platform is like. I've never tried it before, so I decided to try something new. I'm using Streamlabs OBS right now, so I have to figure out multi-streaming in the future. Because right now, if I want to stream on YouTube and on X, I need to pay like $27 a month. I think on the normal OBS software, you can multi-stream for free, so I need to figure that out. But for today's sake, I wanted to get the stream going, so I decided to, hey, let's just try, instead of YouTube, let's try X instead. So let's quickly debrief. This is the Japanese Company Handbook Challenge, and we have done 2 streams so far, besides like the beta streams. But today's day 3, and so far we have found 3 A-tier companies. Whoops, I'm getting some. Today we are trying something. Okay, the stream is catching up, so I have to get rid of that. Yeah, the stream was catching up, so. Let me just delete that link. All good. Yeah, so we have currently 3 A-tier stocks that we found. One is more of like an A- stock. It's more of a defensive stock, so it's hard off. Hard off does essentially secondhand goods, so you can bring your secondhand goods to any of the hard off locations. They have like specialized locations. Some deal with car parts, some deal with more like fashion type of stuff. And so, yeah, this is more of a GARP investment. It's growing domestically and overseas. It's expanding its margins. It has better margins than another really big secondhand store. But I think it's not that undervalued. So I would say it's more of a defensive stock. But for the growth, it might be considered cheap. I haven't had enough time to dive into it too deeply. And then last stream, I looked at a company called Hammock 173A. So it's, yeah, so anytime you see a ticker with like a letter, like A at the end, it means that it's kind of like a newer stock, and it has more of a limited financial history. So the thing about this company that's interesting is that its margins are expanding. It's pretty cheap. If I show you just quickly debrief. So 173 AI was able to make an enterprise value calculation. So market cap of, well, as of the last time I looked at it, which was maybe 2 days ago, the share price was 1604, market cap of almost 7 billion. They have a lot of cash on hand. And so excluding long-term investments as a 3.5 billion enterprise value, almost half the market cap. Yeah, and then on it trades at pretty low multiples, like 4 times EV/EBIT, and then 11 times PE, and it offers a 2.5% div yield. So the thing about this company is that it's pretty asset light. It has essentially 3 different segments where it sells software to companies, and it's been growing its sales. So for the growth potential, this is pretty cheap. And then another company is Buffalo. Buffalo sells pretty generic electronics, some that you might even find on like AliExpress. So yeah, the thing about this company is that it is very cheap. I think I have a tab on this one as well. So extraordinarily cheap on an enterprise value basis, because they have 34 billion market cap, but like 34 billion also in like cash and long-term investments. So essentially EV is close to 0, a little bit slightly positive, right? And it trades at below 1 times price of book. So this is more of a buyback play. So they lowered the dividend from, I believe, either 100 or 120, don't quote me on that, to 80. So they offer div yield of 3.6%, but they are aggressively buying back shares. And so currently it trades at really low multiples, PE of around less than 11 times. But because of their buyback program, they're going to be returning a lot of capital back to shareholders. And so this is more of a setup where you're buying a company that's below 1 times price of book. So it's more of just really cheap company. Management is returning capital to shareholders. But the thing that's risky about this company is that they are selling very generic electronic goods. Like, think about like portable chargers. I think they have some like AC units, things like I think they have hard drives and stuff like that. So Yeah, not a very differentiated business. That's the problem with this one. So I haven't found any S tier stocks yet. So yeah, that is a summary of where we're at right now. Okay, so we left off at page 125. Yeah, so last time we went through token, and we're kind of like where we're at in the book is that we went through quite a few construction companies and energy companies, which is, not really in my wheelhouse. I mean, the construction companies I can learn to understand, but they're not like super undervalued from what I've seen so far. Yeah, so a lot of these companies we're probably going to do a really quick pass, but we'll take a look at it. So currently the company we're looking at is 1768 Sonic. Sonic is a medium-scale general contractor, mainly for the private sector based in Higarashi Rama area. Let's see. So construction and transportation. They are a building contractor through the merger of 3 cargo handling companies. Deals in construction, civil engineering, real estate, and renovation. Okay, so I don't see much potential. But let's quickly take a look at the company. Maybe they have a lot of cash. Maybe they have some real estate. Let's see. Okay, a high of 1262. April dropped to around just over 800. Now it's back up to 893, so just up a little over 10%. Okay, small upside though. Yeah. Description on Koyfin I find is usually more concise than the one I see in the Japanese company handbook. So they engage in general construction business. They construct medical, welfare, education, commercial production, logistics, and religious facilities. Civil engineering, including road and bridges, repairs and maintenance. Okay, take a look at profitability. Okay, extraordinarily low margins. Okay, pretty low margins. This might be an easy pass. Let's quickly take a look at enterprise value. See low last 12 months. Wow. Okay. Well, this is a function of them having a huge drop in profitability. Previously, it was trading at oh wow, pretty low multiples, honestly. So probably the market is saying that it could mean like the profitability should resurface, so the multiples probably look more normal in the future. They probably had some rough quarters. Wonder if I can see any stream analytics, because on YouTube I can see stream analytics, but here I doesn't. How do I do this? Maybe what I can do is I can open the stream on the side, and then I would like to engage with people. Okay, I'm gonna turn on volume on my other end. Oop, full screen. How do I look at this? Okay, so I can only see the views. I don't see like how many people are tuning in, how many concurrent viewers. There's none of those stats. It would be nice to have some stats. Hmm. Okay. Yeah, so just to incentivize people to engage in chat a little more, those who, yeah, those who actually put out, like actually comment in the chat will be automatically put into a randomizer later on, and then be entered into receive a 1 month paid sub for free. Yeah. Yeah. So revenue is unpredictable. Really low profitability. So if it gets to, okay, so if it gets operating income anywhere between 800 to 1.2, so probably in the vicinity of like 5 times EV/EBIT based off of their net cash balance. Oh, I noticed something interesting. I noticed that other two comments on the chat didn't show up, even though I posted it on my Streamlabs. It didn't show up on my X for some reason, which is interesting. Oh, I noticed something interesting. Oops. Okay. Okay, so this does look cheap on a normalized basis, but then the question is, how will they get back to like a normal type of profitability? Hello, Paul. How we engage? See, like the thing about YouTube is that your screen name, your username on YouTube might be completely different from what is on Twitter. Is this your first time tuning in, Paul? Nice to meet you. And congrats, you've been entered into a draw for a free monthly paid sub. So I don't want to spend too much time on this because usually these don't tend to bear much fruit. So I'm just gonna say that hey, this is something cheap, and probably if you guys want to look into it, you guys can. So it's 1768. I'll put it into like a B category. Right, and that's for you guys to look into. Next company. Resol 176A, an independent power producer and supplier mainly engaged in services for collective electricity receiving at condos, where high voltage electric power procured are converted to low voltage power by power transmitting receiving facilities installed within condos and supplied to individual household. Has a business model requiring no initial investment by customers to use electricity and collecting service fees as electricity charges. Handles the green energy business. Interesting. Okay, I'll take a look. The thing about anything that ends with A is that they have such a limited history that it might not be worth it, but let's see. Okay, so price has gone up. April of 1600, it's gone up like 15% since then, but it's actually increased 50% at one point. How profitable are they? Let's see. Margins are kind of low. $36 million market cap. Their last 12 months look like. Okay, still matching in terms of cash and debt. Hello, Japan D-Value. Appreciate. Yes, please tune in more and engage. Yeah. Yeah, tune in whenever you feel like, whenever it's convenient for you. Yeah, glad to have you in chat. Yeah, so basically market cap is close to enterprise value. So let's take a look at profitability, 2.8, 3.3. Okay. Let's say annual result here. 2.8. What does Koyfin say? Their business description is provides electricity services to condos and corporations in Japan. The company offers renewable energy solutions through solar power plants. I see. Develops services that utilize distributed energy sources for residential buildings. Provides BPO services for energy companies and delivers SaaS solutions to support energy companies' digital transformation initiatives. Also engages in the electrical safety, electrical construction, electrical wholesale retail business. This might be in the well, it's not really in my circle of competence, to be fair. I will just click pass because they don't have a lot of financials. So I put this in do not bother pile. Next. 1770 Fujita Engineering. A medium-sized company in the building, factory, and environmental construction business in Gunma Prefecture with its head office in Tagasaki. Started as an air conditioning and water supply system engineering firm and then advanced into the marketing of industrial machinery made by Hitachi, electronic parts processing. Proactive in M&A by acquiring a photovoltaic power generation systems. Okay, let's take a look at business. Sanitation too. Okay, what's their profitability like? Okay, in the 6 to 7% range. Low margins though. Low single-digit margins, but looks cheap potentially. They have a lot of cash. So let's see, this is like 7.4, 7.3 on 14. So like 7 enterprise value. Roughly, and what's their operating income? 7, 2.7. If we say normalized data is 2.5, that would be even just 3 times. That would just be 3 times. So definitely pretty cheap. And then even on an income basis, let's say it's 2 on 14, 7 times PE. Why do they think the forecasted, why is the 4P so high? I mean, there's no analyst, so I'll take that with a grain of salt. This looks pretty cheap. Pretty cheap. Revenues dropped and then increased. What? Okay, we can look deeper. This could just be one of those, like a cheap company play. Give yield around 4%. Okay, let's see. Oh, they have English, nice. Their English is just 1 page. That's their English page? Really? Wait, that's hilarious. Hey, we have English. We offer English. Okay. Okay, so not really offering. Yeah. Maybe that's something they're gonna do in the future. Okay, business introduction. Let's take a look at it. Building facility systems, industrial equipment system, environmental equipment, in-house developed technology. Okay, I'm gonna download this in the investment presentation and then have a look. Do they not do investor presentations? So they have reports, there's securities reports. Okay, it looks like they don't have investor presentations, which is unfortunate because that's what I enjoy looking at. Okay, I'm gonna quickly download that. Ticker is 1770, fiscal year 2024, let's call it. FS. Then give me a second, guys, while I convert this information into English so I can actually read it. Okay. So for anyone who is currently watching, just curious, what country are you guys from? I'm currently based in Canada. I've had people who have tuned into the stream from Pakistan, Afghanistan, Europe, and the US so far. And for those of you who are just tuning in, when you guys actually respond into the chat or say something, you guys will be entered into a draw to receive a 1 month free paid sub to my Substack. Okay, let's quickly calculate the enterprise value for this company. Bum, 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 bum. 770. Fujita Engineering. Last quarter, I'm going to say fiscal year 2024. Could be fiscal year 2025, but share price. What does Yahoo Finance say? Ignore that. That is round one of my most beloved companies. Okay, price is 1537 today. Share price. Shares 10.2 million. Treasury shares 1.028. cash. What's the dividend real quick? 60, 30, 30, okay. Interesting how they staggered it over here. So 3.9% div yield. Okay, cash has gone down a little bit. $6 billion yen. Securities. Okay, I'm gonna assume that's short-term investments. That's a pleasant surprise. Okay. Tangible fixed assets of 3.3 billion. Investment securities. Okay, a lot of investment securities here. A lot. Long-term loans. We could include that, but I'll just exclude that for now. It's okay. No, we could. Well, we could just include it. 309.048. There you go. Let's see. How much debt do they have? Short-term borrowings, 355. Nope, that's it. Long-term debt. Covered bonds, I guess. Yeah. Lease liabilities, they have some, not a lot. What's their book value here? Book value is... Ooh. Okay, it's gonna trade below, yeah, 1 times book for sure. NCI is, let's see, none. Okay. So looking, if we include long-term investments, then essentially it's, yeah, enterprise value has gone basically to 0. Intangible assets. Total assets. Okay, let's see, how did they do? Company's gonna appear extraordinarily cheap given the multiples, given their enterprise value is so low. Yeah. What are they predicting for next period? 31,000, so a slight drop in sales. Operating income, ordinary income. Take a look at the cash flow statement. 11. D&A, no amortization, CapEx. Here's what CapEx is on a longer term basis. I'm going to zoom out on Koyfin later. Okay, aggressively buying investment securities. Yeah, that's about it. Okay, let's take a look at Koyfin. DNA is pretty stable over time. Two, 1, 3. Okay, let's just do the upper end because they did make a pretty large capex last year. You can do 230 is probably okay. Okay, capex. What have they been spending here? That's doesn't include the most recent period. Yeah, they don't have the annual included in this data set here, which is annoying. Okay. But over time, ranges between 100 to around 200. See, 330, 440, 440, 600, 900, 1150, 1, 2, 3, 4, 5, 6, 7, 1150, 700. Okay, around 160, 150 per year. Let's do 175. That's okay. So even if we exclude long-term investments, it's still pretty cheap. PE is pretty low. Revenue dropping, that could be a concern for sure. So let's see what the company has to say. Okay, so in the domestic construction industry to which our group's core business belongs, public investment has remained steady and there has been an increase in the willingness of private companies to make capital investments. However, the industry remains in a challenging environment with a shortage of skilled labor and rising costs for construction materials and other items. In this environment, the group has set the basic policies of the medium-term plan as strengthening our business foundation, strengthening HR. Okay. Okay, construction business. In this business, which is the core business of our group, orders received were 16.8 billion. By division, industrial facility construction was 9.6 billion. Okay, so that seems like their biggest sales within this category. Building facility construction 2.5 billion. Environmental facility construction 4.8. Okay. Okay, so sales decreased a little bit due to construction progress. Okay, equipment sales and information system sales. In this business, sales increased 3.5% due to sales of industrial equipment such as air conditioners and tools. As well as steady orders for work, installation work of information and communication equipment and contracted development systems. Equipment maintenance up 8.1% due to steady orders for both equipment maintenance and repair. Electronic components manufacturing business. In this business, orders for equipment development were steady, but due to the decrease in contracted semiconductor processing, sales were low. As for the future of the Japanese economy, let me just read this first. Okay, the group will continue to focus on human capital, improve the work environment, implement measures to reduce the environmental impact, thereby fulfilling its social responsibilities. I don't care about that. In addition, the group will strive to improve the efficiency of operations by systematizing and reconstructing its production structures. Sure. And to strengthen its foundation by expanding its business domains through M&A. Okay, well, it does have a lot of cash and investment securities, so I hope it does something like that. while responding to the needs of society and customers. Okay. Are they going to buy back shares because they're trading below 1 times book? That would be interesting. Or raising their dividend. But 3.9% is not bad. Trading below 1 times book is not bad. Having this low PE is also not bad. Overall, not bad. Is it a slam dunk? I don't really have a stance on this business in terms of, you know, what they do. And internationally, so unless there's an international angle here. Okay, so if we're gonna spend an extra 15 minutes, let's say it's worth it. Let's think about how we want to approach valuing this company or looking into this company. So if we see that they are able to expand internationally, that would be good. If we see that they're impacted by the US tariffs, that could be bad. They do some maintenance work, which is pretty high margin and reoccurring. So seeing some type of shift from reoccurring sales to one-off sales could be interesting. Okay, so we also have the securities report. So let's see what they say here. They have 5 consolidated subsidiaries and 2 non-consolidated subsidiaries. They engage in construction business, equipment sales, information systems business. I'm curious on this one actually. Which sells industrial equipment, installs and sells information and communication equipment. Develops and sells software. Okay. See if they say more about. Construction business, equipment sales, equipment maintenance, electronic components manufacturing. So quite a few segments. Okay, this is interesting information. So since our founding group has worked hard hand in hand with the local community, upholding our management philosophy. The domestic market has reached maturity, and with economic activity becoming borderless due to the expansion of trade liberalization and rapid development of information and communication technology, value creation on a new stage is required. Okay, it's good that they are aware of that. In addition, with the growing interest in global environmental issues, the social demands on companies are changing, and organizational reform to realize a sustainable business structure is becoming inevitable. In response to these diversifying social needs, our group has established a system that allows us to provide customers with one-stop services from facility planning to construction, maintenance, and contract management through our business. Okay, so essentially they have a funnel business. Like we construct for you, and afterwards we help maintain, yada yada yada. So that's good. Construction, equipment sales and information systems, equipment maintenance, electronic component manufacturing. This seems not as cohesive or related to other ones. Okay, we are able to streamline our customers' manufacturing processes and maintenance operations. We will continue to promote the creation of sustainable businesses by pulling together information and technology. Let's see here. I want to figure out like if they have anything, any competitive advantage whatsoever, but I'm not seeing it right now. Hmm. Minoru Fujita. Who is that? President ONCO. Okay. You joined the company. That's 2.3 million shares. Okay. Someone in Connecticut owns 2.6%. Interesting. Okay, corporate governance. Let's see. Anything here? Any angle here? Yeah. And the translation, like the conversion software being interactive broker is extra large. So it's kind of hard not to miss. Not much. Let's go back to table of contents. Anything here I want to look at? Double. Do they really have no investment presentation? Looks like they don't. Oh, wait, hold on. Oh, wait, that's last year. Never mind. Okay, maybe something is in here, but I don't know how well this will translate though. So I'll try. And then that'll be my final attempt at looking for immense value from this company. I don't think it's gonna work. What? I wasn't able to detect. Hold on, one sec. My normal online doc translator is not able to process this document, looks like. Okay. Okay, no, it's not gonna work. Well, with the information that we have, let's see. They're not really giving much info. Yeah. I would like more info. Oh, nice. They did buy some stock. Yeah. 1 point. Hold on. 1 sec. Is that possible? Let me just check one thing. I just want to look historically whether they've done any acquisitions recently. So I'm just going to look at their annual reports last couple of years and see if I can find any. So we know this. Okay, let's take a look at this one. Oh, okay, so they did have more shares before. They did have more shares before. Yep. Yeah, so they did. Okay, they bought back 1.5. Yeah, they bought back 1.5. They bought back 1.5, so that's good. Okay, I'm seeing it over here. So recently they bought back 1.5, so they have bought back shares. 1.5. Construction business, not likely to grow revenues too much, could be a value trap, but they are buying back shares. Let me just double check Koyfin on their cash balance, just real quick. So it's gone up. I don't think this is accurate recording. Is it accurate recording? No, I don't think this is being reflected properly. Don't think so. They did buy back 1.5 million shares. They have more capacity to do that. I would like to see them do some. I don't know how they're going to expand just by doing construction by itself. They have to like expand by either expanding other business segments or performing some M&A, as they said. Don't see that yet, but the good sign is they have bought back shares. What's their revenue looking like here? Okay, construction equipment sales. Ooh. So construction's a small part, transferred for a certain period of time. Let's see, construction business is around like a 6% margin business. Equipment sales and information systems is, wow, really low. So that's 3.3% business. Equipment maintenance, pretty good, 9%. Electronic parts manufacturing, terrible. Like 4%, absolute dog shit. Let's see, how about over here? Has it improved? Over here it improved, around 9. What was it over here? Okay, from 6 to 9. This one is still consistently bad, 4% roughly, or 5. Equipment maintenance, 9 here. Over here it actually also around 9. 5%. Over here it was so slightly better. I'm not seeing it. Not seeing it. So it is cheap. The question is, I'm not seeing how it can like unlock value too much. So I would say this is a B. Some 0. Then B. If you guys have any like insights into this business, or if you guys want to dig deeper, it could definitely improve. But given I have 30 minutes to look into it, I think I would put it into a B category. Okay, next stock. Next thing. Let's close this. Nippon Kanryo Industry. Engineering work related to traffic safety, such as for signs and safety barriers. Oh, interesting. Which account for around 80% of total sales. Headquartered in Fukuoka City. Established in Osaka. Slope reinforcement works. Launched the housing-related restaurant service and other businesses through M&A in the late 1990s. That doesn't sound very good. But later abandoned the diversification strategy due to worsened business performance. Sure. Uh, they made some pavement material. Okay, it's not very promising, but we'll see. 171. Okay, so share performance has been doing not bad. Pretty steady. Pretty steady. So we might have some like contracts with the government potentially. Company constructs monument, clock tower, car stop, solar lighting, design, and LED lighting, footlight, shelter, net fence, blindfold fence, ball protection net. Okay, many random things here. Emergency stuff. Okay, interesting. Okay, low margin business. Oh, okay, this looks interesting. A negative enterprise value company. Okay, so let's see. 5 million market cap, 5.6, 5.3, so negative 1.3. Okay, that woke me up. Negative 1.3. PE of around 14. Let's see. 5 billion. What's the most recent income statement? Five on. Okay, let's say normalize is 600 and 5. Not bad. A little under 9 times PE is not bad. Question is then, okay, this is now in value trap territory. How do we get out of value trap territory? Because it's gone down as low as like 3.6 million market cap. Oh, 3.2. Well, it's grown since then. 2.6. Let's see if they're okay. How's their corporate governance? Devial 1.9% is low. Let's take a look. Okay, guys, I need to use the bathroom real quick. I'll be right back. Okay, I am back. Okay, Canria, what was this one about? This one was about no margin but negative enterprise value. Yeah, negative enterprise value. To the tune of 1.4. PE wasn't this high. 5 billion market cap. So 9 times. Okay. Okay. So what we want to figure out is, are they going to be willing to return some capital back to shareholders, or if there's any growth opportunities here? Likely not, but we'll see. In terms of cheap, this is, is in there. They don't have it in English, right? They don't. Traffic safety equipment, road marking, road sign, protective fence, other civil engineering, slopes. What does that mean? Like an actual slope? Oh, so like to prevent landslides, prevent like rockfall, like if there's like any like earthquake or anything like that. I see. Okay. Still related to like traffic safety, environment maintenance, landscape related, maintenance related. Disaster. Okay, so these are related fields in a way. Okay, interesting. Okay, the amount of reporting they do is kind of low. There's not as a presentation. See, across the board, a lot of companies are increasing their starting salaries for graduates. Well, they're increasing their wages across the board. This can't be colored. This is just in grayscale. Key. I wonder to see if they have any investment securities that would further enhance the cheapness. Okay, yeah, they do. 500. 5.6 in cash. A little bit of debt. Yeah, price of book is low. You're half. Construction of roads. Like, the thing is, like, okay, Japan has a declining population, so the amount of people driving I mean, Japan's also like a more of a, I would say, transit slash walking city country, especially in very densely populated areas. So if there are less people, there's less traffic. And even tourists that come to Japan don't typically rent cars. I mean, they do, because Japan has a really nice car culture, but it's not enough to result in increased demand for this type of thing. So for this to happen, we need either a couple of things to happen. We need either more road usage or more. This is weird to say. More natural disasters, which would require them to fix up the roads, or like the slope thing. So put up more fences and stuff to protect against rock falling, stuff like that. Yeah. Hmm. So in a sense, if Japan's in a state of more natural disasters, this company could go up, which is weird to say. Hmm. Is very cheap though. Hmm. Dividend yield? 19. 19, let's confirm that. 19, not increasing it. Next period they're gonna forecast 19. Whoa, that's a massive increase in revenue. Oh, 9 months. This is 9 months. Sorry, this is 9 months. This is not annual. Not annualized. What's their forecast? So 770 on 5 billion. Let's call it 800. 6 times P. So P is going to drop even further. What's their historical? Could this be a mean reversion play? What's their historical P? Oh. Well, if the next period is truly 770, and this is an actual correct figure, 1,000. 1,000 on, what's our share count? Let's see. 1,000 on, let's call it 5 mil. Yeah, it's around 5 million, yeah. Hmm. That's not expensive. I mean, if this is true, then it has a mean revert, so it has to go up, right? 998. So this isn't overpriced, even though it's at all-time highs. Well, recent all-time highs. Really wish their dividend yield was higher, or they did more buybacks. Let's take a look at share count over time. Let's see here. So 5.2, 1.44. That did change. Let's see if it might have changed historically. If we go back further, so let's see here. Let's take a look at over here. So over here, 5.102, 144, 144. Okay, same thing. So the share count hasn't changed, and they trade below 1 times book, like 0.5 times. And I'm curious if these are government contracts, right? Because if they're if it's road related, it should be government contracts. So this should be like very, very predictable income, right? Like it's, yeah, disaster prevention, storage food. So yeah, this is a stock you would put in a basket if Japan were to enter a phase of natural disasters. Recently watched a video by Broad in Japan about the earthquake potential. Sorry, the eruption potential of certain volcanoes in yeah, this is what happens if Japan's most dangerous volcano erupts, right? So there's like a 5 to 10% chance that one of their most dangerous volcanoes will erupt in the next 30 years. So if you wanted to create a basket that kind of potentially does well in this type of scenario, you know, could be this stock. Whether you want to do something like that is up to you, but that's yeah. It's interesting. I think this deserves a little bit more time to look into it, but I think for the time being, oh, could this be an A stock? It could be, but I think I need to spend more time, and they don't provide enough data. That's my issue with it. Okay, I'm gonna convert one of these documents so that I can hopefully figure some stuff out. Yeah, maybe there's some valuable information in this document. Let me see. But I have a feeling that document is going to be hard to convert. What do the revenue segments look like? Construction and then protection stuff. Construction went down. And safety went up. Yeah, I'm curious what the company's commentary on this stuff is. So. Fingers crossed the term report can be could be converted. Oh, we might get lucky. It's not just images, because usually if a report has a lot of images, it won't be able to convert because it just identifies whatever the text is as images, and it just. Okay, nice, not bad. Very good. Very good. Okay, let's see the financial statement as well, to see if there's any commentary. I just want to get a sense. Yeah, a catalyst for this company is if they were to release some type of investor presentation guiding people on what their long-term plans are. I think that's what it is. Okay, let's see here. No increase the dividend. Okay, let's see. The order environment remains severe due to rising construction material costs and high labor costs caused by shortage of construction workers. However, public investment has remained firm. Under these circumstances, okay, so revenue decreased a little bit. Operating leverage went on the opposite direction. Okay, so in the construction business, slope-related construction and maintenance-related construction work as part of natural disaster prevention, mitigation, and national resilience measures remained steady, but the amount of completed construction work decreased compared to the previous interim fiscal year due to decrease in large-scale construction work for road safety facilities, such as the repair and replacement of sound insulation walls on high-standard roads. As for sales of construction-related materials, while sales of civil engineering-related materials remained steady, sales of mainstays traffic safety facility materials decreased, resulting in a decrease in product sales compared to last year. Okay, disaster prevention and safety business. Regarding the performance of disaster prevention and safety business, sales of avian influenza prevention supplies. They do that? Oh, interesting. And disaster prevention stockpiling materials ordered by government agencies were favorable. The sales of safety and health protection equipment such as measuring instruments and safety boots used in factories also increased, resulting in an increase in sales. Up 36%. Not much other commentary. I feel like they just don't report much. Destruction, natural disaster. What's their historical sales look like again? Okay, sales has gone up. Down and up, down and up. Okay. 2021. Let's take a look at their shareholder meeting. Okay, so we recognize that returning profits to shareholders is an important management issue, and we strive to ensure stable management base and make it our basic policy to provide stable and continuous shareholder dividends. Oh, they have preferred stock. Oh. So no change in dividend. Okay, let's see here. So this person is the they have a medium management power plan, so I may have to look into that. Investing in human resource, improving productivity, increasing added value. Saga National Sports and All Japan sports-related projects, replacement of noise barriers on expressways, and efforts in bridge structure repair work. Okay, in the construction industry, which is the group's main business, the public works budget is based on the new National Land Formation Plan. Interesting. So it aims to realize a nation that connects regional strength in a new area. The budget is based on three pillars: ensuring the safety and security of people, achieving sustainable economic growth, and developing regions that make use of their individuality. Okay. Although a certain amount of public investment is expected in each field, in addition to rising labor costs and material prices, restrictions on working hours will come into effect in the construction industry from April 2024, requiring further strengthening of efforts to secure and develop human resources, and the business environment is expected to remain severe. Okay, so I think what that means is that if you have restrictions on working hours, you need, let's say you can't do overtime, can't work past 12 a.m., let's say, for example, right? Then instead of hiring less people, you have to hire more people because you have a certain window in which people have to work, so you have to hire more people to get a job done. They want to achieve sales of 20 billion yen in the fiscal year 2026. Is that possible? 18, 17, 17, 17.5. And they were forecasting 18 before, right? So nothing they say indicates that it will lead to 20 though. And okay, so their table of contents. Business report 14. Financial documents 45. 14. Oh, we read that already. We read that already. Okay, so go back. 45. Maybe something here. So the story here that I'm getting a sense of is revenues are going to stay pretty much where they were before unless there's some type of inflation. So where the cost of the materials get passed on to the consumer. I expect that operating income to be still around this range. They're going to continue to accumulate cash as we can see, like it hasn't dropped. Then the question is, how do they expand, right? It doesn't seem like they have any intention to use any of the capital to buy anything. I hope they do. Their dividend yield is too low right now. They should be increasing it. So that's annoying. Yeah, and they haven't really bought back shares, so this is more in the value trap region, potentially, with potential to not be like that, but I think this is more value trap. Be like a B minus because it is cheap. So yeah. Okay, next company. Fuji Furukawa Engineering. So 1775. Electrical engineering company. So strengthened communication works and air conditioner installation works. So they conduct plant engineering works including water treatment, environment, energy, industrial plants, as well as telecom related works. Sales have been increasing, operating income increasing. Let's see, this is around 7%, 8%. This is, yeah, 8-9%. 1775. 1775. So usually when that's the case, it means they're being delisted, typically. Okay, we're just going to assume it's delisted. Which can happen because this book was published in fall of 2024. So, Sumikin Mitsu Road, mid-sized road paving contractor. But you know what? I need to have to make a note on that one because that one's interesting in that even though it's a B9, it's likely a value drop. 7-1 value trap. Negative EV, low div, low buybacks, benefits from natural disaster, road repairs. So if there was a basket, we would put into that one. Nippon Kanru. Alright. Road paving contractor. Pavement of roads, airports, harbors, living, community facilities, landscaping, civil engineering, electricity, and plumbing. Ooh. So, prices have gone up. Oh, consistently gone up. So, I wonder how they're able to do that. Some good capital allocation, potentially. Okay, enterprise value has been negative, consistently negative. Let's see here. So cash balance increasing. Okay, cash balance consistently increasing with not a lot of debt. All right, profitability. Okay, low profitability, very low margins, extraordinary low margins. Yes. Yeah, only PE multiples because enterprise value is negative. Makes sense. Oh, the enterprise values suddenly go up? How is that possible? Okay, so basically the stock rallied to 14 billion off of 6, so it has, oh, that's roughly an 8 billion enterprise value now. It resurfaced. So if we think that there's any comparability between this and a company that we just looked at, like if we think about like, okay, if we believe that, hey, this can get out of negative enterprise value territory, then what's to say 1771 can't, right? So my thesis can change if I think there's potential there. How about their revenues? Because their revenues have been consistently increasing. That could be a good sign for the company. Okay, on the contrary, that's not the case at all. So revenues have actually declined over time. Operating income, 1 billion, 1 billion, 1.8. Okay, so profitable, but unpredictability in the profitability. So yeah, so yes, operating margins have declined. But then LTM, maybe they improved. Let's see. Contrary again, LTM EBIT margins haven't improved, actually gotten worse, and then somehow their price just kept going up. Are they aggressively buying back shares? Maybe. That could be the case. I don't know. Huh, that's weird. Cash flow. Okay, so they have been increasing the dividend. Okay, so let's take a look at that. 3.23%. Beginning in 2005 was what, 1,000? It's increased 50% in this 1 year. Okay, maybe there's some reasoning. We have to figure out what that reasoning is right now. We're looking at 1776. Let me just change the token. What manufacturing and sales do they do? Asphalt mixtures. Okay, aggregates. Okay. Industrial waste processing, recycling. Okay. Okay. Construction at mainstay. Okay, so Nagasaki Expressway pavement repair work. Kokubunji City detached house land development and new park construction. Route 17 Kamibu Road. Road construction, social infrastructure, community facilities, environmental considerations. Okay. Dear investors. Okay. Yeah, I haven't seen an investment presentation in a minute. Thought for a second people just didn't like doing that kind of stuff. So they're projecting, let's see, 710. Their enterprise value is going to be net 6, right? Cash wise? Let's double check cash. 7. 7 on 14, so 7 enterprise value. 7 enterprise value. Do you have any investment stuff? Not really. Okay, so if they're forecasting 710 on 7, it's 10 times EV/EBIT. Oh, that's no longer cheap now. And then 420 on why? Why is this company going up? I don't understand. That doesn't make sense. Let's see if we can try to figure out why this is the case. Because the margins on even 1771 were better, right? Like, I think, if I recall correctly, profitability, right? Like profitability on this company was declining. Like, this is declining too, but not even to that extent. It's like it's still higher. So this should mean revert if, or go higher, you know, if that other company is any indication of where it should end up. Public investment remains solid and private demand is also robust. In the private sector, we also provide a wide range of major and local general contractors, developers, and airport-related businesses, companies. Profitability worsens due to rising construction material costs. Yeah, you have literally sub 2% EBIT margins. Manufacturing and sales business. The industry's asphalt mix production volume is on a downward trend. High raw material and energy prices put pressure on profits. Competition between companies make it difficult to set sales prices that are commensurate with costs. Okay, that doesn't seem very good. In the construction business, the amount of completed construction decreased due to a decrease in orders for large-scale construction. And in manufacturing and sales business, sales decreased due to decrease in shipment volume, resulting in decrease in revenue. Consolidated operating profit. The construction business saw a large decline due to a decline in profits from a decline in completed construction work and the occurrence of construction projects that incurred losses. Ooh, that's not good. In the manufacturing and sales business, profits fell due to rising manufacturing costs and raw material and energy prices. Orders received. Although construction work received a wide range of orders, both public and private sector orders decreased due to a shortage of personnel, and the manufacturing and sales business saw a decrease in shipment volume due to fierce competition between companies. I don't understand why this company's going up then. Like, these are all negative factors. What is making it go up? Orders received declining, complete construction amount gone down, segment profit went down. What the fuck is going on here? let's open up the Japanese filing so I get a better view. Okay. Still expensive. It's saying it's expensive right now. Increase employee productivity, strengthening public works order intake, expansion of new businesses, increase earnings power, human resource strategy, DX. I mean, that's clarification of cash allocation. What is their cash allocation strategy? Because, like, their price is a little overpriced now. So, are they buying back shares aggressively? What is their share count looking like here? Let me just take a look at that real quick. So, financial summary. That's kind of okay. Okay, let's download this. Okay. Convert. Okay. No, share count hasn't changed. Div yield? Okay, they increased it a little bit. 50 on what? 50 on... Hello? Hello? It's me. 50 on 3%. Oh my god. So, let's see here. 2 years, 3 years, 1 year. Yeah, it was closer to 5% at one point. 900. Still not getting much conviction here. Not seeing the vision here either. Yeah. No, I don't see it. I don't see it. I don't see why this company. No, this is just either too hard or just not great. So I would put this in like a D pile right here. Like if this has gone up that much, then this should actually elevate to like an A minus, because like then 177 should definitely go up. There's negative enterprise value right now, and there's better margins. Right. So this company has more revenues actually. Let me just quickly sanity check that real quick. So revenue wise, 30, 31, 35, 34, 35, 36. Okay. And then half the size, and the revenue actually grew. It didn't decline, it actually grew. So, I mean, if this company were to increase their dividend or do some buyback, I think it'd be good. Yeah, because it's trading less than 1 times book, right? So yeah, understanding why I trade so cheaply. Doesn't really make much sense. Yeah. So, next. Okay, 1777. Slot machine. Okay, Kawasaki Setsubi Kogyo. Middle class engineering firm. Air conditioning, plumbing, and others. They resumed aircraft production in 1951. Air conditioner installation works as well as plumbing works for toilets, water supply systems, kitchens, and others. Has a track record, especially in large hospitals and others. Major customers for plant equipment works include Kawasaki Heavy, Toyota Motor. Seems like a stable business. Yeah. Okay, prices have done quite well, up 40% since April, up 75. Profitability, mid-single digits. 17, oh. Yeah, same thing. Market cap just went through the roof. So that's not really in relation to what it is in LTM. LTM actually probably went into something more normal. At one point it went to like almost close to zero enterprise value, but now it's gone up. So this is like 14. 14 enterprise value. It must have been due to cash. Okay, 8.5 times PE. Okay, let's see what it is right now. So it's a 14, right? So it's 3 billion, 6 billion, yeah, 3. So 14. Okay, 14 on over what operating income? 14 on 1.7, 3.4. 3.4 is 2, so 7 is 4, so 8 times, a little, okay, like 9 times, 8, 9 times EV/EBIT. So it's gotten to a normal state now, 11 times, so, okay, it's gone to a normal state. If it goes to a normal state, I don't see much value here. Unless you're telling me there's some growth here that I'm missing. And I don't see growth in revenues. No. This just looks like some mean reversion play where it's like, well, not even mean reversion because they historically have been trading at really low single-digit multiples, and now suddenly the market's like, hey, we like you now. Do we have some dividends here then? Okay, 3.5%. 3.5%. What do they issue as a dividend? Dividend. Do we know? Dividend per share? We don't know. Okay, so say 25% EPS. So EPS is 70 on 25% of that would be 28. 28 is 2%. It's trash. It's trash. Okay, sign jack over here too. On 28, this would be like over 15. Also trash. Multiples. Cash balance went down. Cash balance went down. Then revenues didn't go up. 25 LTM, 22. Oh, okay. LTM basis revenue went up. Revenue went up. Operating income 1. 14 times. No, I still don't think that's worth. HVAC installation. Don't see it. Okay, too hard pile. 1777. I mean, it's already like, it's fairly valued at this point. I mean, so it's not too hard. It's just like, too fairly valued. Kojin Bio 177A develops, manufactures, and sells tissue culture media aiming to proliferate human and animal cells, while also engaging in contract cell processing. The tissue culture medium business has been shifting its focus from research use ones to those for clinical studies and testing for the regenerative medicine and other sectors. Strengthening the field of immune cell therapy for cancer using internally produced culture media, leveraging culture technology accumulated for a long time. Enjoys special demand for products related to COVID-19 in the microbiological media business. This is definitely outside of my circle of competence, but we'll take a look. I don't even know half the things that I just said meant. Okay, so 28, 17, 1100 difference. 60-70% upside. Been trading in a range bound. 1400 up 20%-ish. Oh my god, manufacturing sells animal blood, sera, tissue cultures, microorganism tests. Yeah, this is beyond my circle of competence for sure. EBIT margins are nice though. Income statement looking like, okay, we're usually gone up. That's LTM. Going up, stable. 41 billion. Operating margins went down recently. See, the thing is, you won't know what a normalized state is, but at the peak, let's see, 1 point. Do they have any cash? A little bit of debt. LTM. Okay, some LTM data. A little more cash. So 1 billion. So this is like 7.7. Let's call it 8. 8. Let's say normalized 1 time 1 billion yen. Operating income could be 8 times EV. But what is their most recent LTM here? 900. Okay. So it could be 9 times, and then 7 times. Sorry. 700 million net income. 7 on this. 13 times, 12, 13 times PE. Too complex. I don't know enough about this stuff. Okay, 177A. Yamaura, a medium-scale construction company based in southern Nagano Prefecture. Engage in the building construction civil engineer. Oh no, not that again. How many building construction companies are there going to be? Jesus. In-house brand leasing condo, Brain Mansion, are franchised nationwide. The company advanced into regions other than Nagano Prefecture, effecting the real estate solution business. Okay, so if they, okay. 1780, yeah, Yamaura. $17 can go up 400, so 33% roughly upside. Going up roughly 30%. So they do public and private construction, civil engineering. I don't see any leasing. Don't see any leasing. fluctuating profitability. $25 billion market cap. 25 on 7.5, so 17.5 right now. $17.5 on how much operating? 17.5 on 6.3. So okay, around 6 times EV/EBIT. Earnings around 2, so 12.5 times PE. Just don't see potential. I'll just skip. 1780. Next. Fantasista. Another construction company. Deployment of EV charging and supplement sales. Focus on M&A. Let's take a look. 1783. Oh, just recently skyrocketed. Went from, okay, almost doubled in share price. Almost. So one-stop shop in terms of real estate. Real estate matching site. Okay, how's profitability? Damn. So this tells me they have a lot of different segments, and then different segments that perform poorly can impact the entirety of the entire group. And because of that, it traded at a really low multiple or price before. How much cash they have? 2.5, so 7.5 EV. Okay, they trade as low as 3 in 2021. $7.5. Okay, they've been doing good this recent quarter. So 7.5 times EV/EBIT. 18-20 times PE. Unpleasant too complex. Wow. 1783. Okay, next one. Oriental Shiraishi. Bridge builder. Okay, 1786. We'll just take a look. I don't know much about bridge builders. Pretty stable. Hasn't really gone anywhere in description. Almost 4% div yield. %. Oh, goddamn. Okay, quite a bit of cash, maybe. Let's see. Yes, so this is like 16, 17. It's Well, 16, 32 enterprise value, 32, 32, as low as 18, as low as negative enterprise value, 0 market cap at one point. Is that accurate? Oh. So it emerged from bankruptcy then. Likely. Likely emerged from bankruptcy. Okay, I already don't like that too much already. Probably we're over levered, something like that. Six on 32. 5 to 6 times EV bit. 6, 12 times. How have their revenues been able to increase year over year? That's very interesting to me. They built bridges. Just double check. Build pre-stressed concrete structures and products. Pneumatic caissons, repair, retrofit, and reinforcement of infrastructure, design, and construction of earthquake-resistant buildings. Oh, okay. That's important. That sales of construction materials and devices. Solar panel through operation of solar panel plants. They have solar panel plants too. What was their revenue? Let's see. Construction, 82, steel structure, port harboring engineering works. I don't think it's cheap enough. Nope. Nakabotech corrosion protecting. An engineering firm specializing in corrosion prevention for steel and other structures. Engineering works for piers, seawalls, and port facilities as a mainstay. Also engage in underground facilities such as water supplies, gas and oil lines, land facilities including power stations and chemical plants. Including concrete structures suffering from seawater such as bridges. And they have a track record in overseas markets, so overseas revenue. I have no idea what that means. Marine biofouling for power utilities. Not in my wheelhouse. Definitely haven't looked at something like this before, so. In a range, trading in a range. Low margin business. Let's see if decrease in net cash. Let's see here. 217 on 13, so around 10 billion enterprise value. 10 billion. 1.3. Let's say 1 to 1.2. It's around 8 times, 9 times. EV bit 900 on 13. Yeah, I can't really add much value here, I think. Revenue growth is rather slow, but has increased. Oh, okay, some operating leverage. Some. Corrosion protecting. So the angle would have to be some type of overseas expansion. Corrosion protecting. Margins aren't that great, but decent. Oh, margins have improved. Okay, that's worth looking at it a little bit. Let's see if there's any overseas revenue or overseas angle I can take on this company. This pattern looks awfully like the Oricon news one. Port business, underground business, onshore business, RC, rail cart business, offshore wind power business. So the idea is probably like if there's more and more of these projects being done, then they would have more business, right? Cathodic protection is said to be the most reliable method. Interesting. E-commerce site. Huh. Okay. It'd be funny if they have like really high e-commerce sales for some reason. Midterm management plan. Which is their latest one? Sure. Okay, I'll take a look at the midterm management plan. Convert that real quick. All I'm looking for is an angle where there's some level of growth. If there's no growth, then very hard to justify. 1.4. So their goal is 1.4. Okay. 1.4 on, what was it? 10? It was, yeah, it was 10, right? 10 interval value. So around 7 times EV even, and by 2030, that's, I mean, yeah, I mean, it's not good, not great. What is their dividend yield? 260. 260 on, oh. So, oh, almost 5%. Almost 5%? 260, yeah, almost. It's not exactly accurate here. It was 300 before. That was just 260. It was higher before. Sync 14, 1.3. Maybe to see it as like a pretty stable business. Do you have any buybacks? Let's see. No, no buybacks. I'll just say outside of my. Well, we can quickly hold on. See if there's an overseas element here. No, don't mention of anything else. Okay, I mean that's it then. 1787 probably just pass. Santo 178. Sewage systems. Factories and condos. Seismic strengthening. As proprietary technologies. Mountain and flood control works. Dam and river construction works. Road and bridge construction works. Land preparation. Oh, this is very low market cap. It's extraordinary low market cap. Let's see. What? 1788. I mean, it's been around for a while though. The data is so weird on this LTM. So 1.1, 1.1, so 1.1 EV. 1.1. 1.1. If you get to 200, it'll be 5 times. This is like 8, 9 times. What is share dividend? Yield isn't great. Okay, skip. 1788. How many companies did I go to today? We went through 13 in 2.5 hours. That's pretty good progress. Okay, guys, I think that's going to be it for today. We went through 13 companies, not bad in terms of progress. We'll continue in a day or two. Yeah. thanks everyone for tuning in. There was 214 of you, pretty good. But not a lot of you actually engage in the chat. So I find for some reason on YouTube I get a lot more engagement. I don't know if you guys are just it could be me. It could be me. I'll blame myself first. You know, I could just be very boring today. But yeah, appreciate you guys tuning in. What I don't like about this is I have no clue at any given time how many viewers there actually are. I just see the total number of views, which is a little annoying. Yeah, so for today's prize, there's only going to be 2 people that can qualify for the prize. Since there's only been 2 people that commented, no one else wanted to comment. So if that's the case, then yeah, I'll be one of you 2 that get the monthly prize. You know what? Might as well do that now. Might as well do that now. So I'm gonna put a random number generator between min, max 1 and 2. Just test it out real quick. Make sure it works. Okay, so 1 would be Paul, and then 2 is Japan D value. Okay, so 1 is Paul, 2 is Japan D value. Okay, that means Paul won. Okay, I pressed it. So yeah, Paul gets the congratulations, Paul. You get the monthly paid sub. So congrats. Yeah. Yeah, there's 215 views. Okay, yeah, so that's it for today's live stream. Just to do a quick recap, I guess. I didn't find any A-tier stocks today. Nippon Cameo is interesting. It was the most cheapest company because it had a negative enterprise value, but then the dividend yield was low, didn't really do much buybacks. But they do benefit from natural disasters, so that if there's a natural disaster in Japan and they need to rebuild roads, then Nippon Cameo would actually benefit from that specifically. Yeah, a lot of other construction companies, but the thing about these ones is they're like the revenues. I don't see them going pretty much anywhere. Even though if they look cheap, some of them have really low margins. Some of them is at the mercy of like material costs. So it's not really, yeah, nothing really stood out besides 1771 today. Yeah. And then there was one other company that was like, I think either 1772 or 177 something. But essentially, it went up a lot, and it also paved roads. So, but it had twice the amount of revenue of Nippon Cameo, and it formerly was trading at negative enterprise value, and then it went all the way back up. So, yeah, not sure why that one went up with Nippon Cameo not going up, which is kind of strange. So, yeah, that's today's stream, and thanks for tuning in. And I'll be consistently doing them this month until I get to 10 A or S tier shares. I just need to get through this construction phase because like all these stocks are related to construction one way or another, which is kind of annoying. But you know, I said I was going to go through every single stock, you know, so that's what I'm going to do. So yeah, thanks for tuning in, guys. See you guys next time. Peace.